Hey, what up, everybody? It's Rhett Weaver here from Intraland, Utah. Just wanted to get you guys some data out from last year and kind of what they're predicting for this year. So behind me, I've got what's called CoreLogic. I'm going to put it in this email. You're going to see some links below of websites so you guys can kind of take a look at some interesting articles, and I'll link this one below. But I want you guys to really pay attention to this. CoreLogic is basically a trusted site of the forecasting of what homes are going to do. So if we take a look at kind of month over month, year over year, what they're projecting month over month is it's going to drop by 0.1%. Year over year is it's going to still go up 2.8% this year. So for everybody out there that's basically forecasting that, hey, this recession is going to put everybody's homes at risk, that, homes aren't going to go up in value, take a look at this, go through this website, read everything about it. Basically, they're predicting that we're going to still see a 3% gain nationwide, which could be a little bit better even here in the state of Utah. It does have some very interesting facts, go over what happened in 2022 as far as some of the biggest growth cities, and kind of what's going to happen for this year. So I think it's kind of an awesome article for you guys to take a look at. But the positive here is kind of this growth. I did want to show you kind of what's going on in the market right now, what's happening with interest rates. A lot of you probably saw that the government signed that $1.7 trillion bill into place, which obviously kind of hurt the bond market just because of the uncertainty of kind of what's going on. I do want to give you some positive news. Obviously, this year we're up 11 basis points to kind of start the year out, which is really good. We do have a couple levels. So every line that you're kind of seeing here, again, if you are new to this, green means interest rates are getting better. Red means interest rates are getting a little bit worse. So we do have a couple lines to kind of break through here. We should see some good gains this week. We've got kind of the minutes from the Fed meeting coming out tomorrow. We've got ADP job reports coming out on Thursday. So we've got some good stuff that will kind of go in our favor. Also today released globally was some of Europe's numbers on inflation, which really helped out our market as well. We're all kind of intertwined. So everybody's talking about a possible recession this year, that inflation is now starting to come down globally, which is really good for the bond market. What I want to kind of show you is the 10-year treasury. This is kind of the good news that we're seeing right now. This is a big line that we need to break. And if we can break it, we've got a lot of room for the upside for mortgage bonds. We want the 10-year treasury to go red. Whenever this is red, it means mortgage bonds are going green, which means interest rates are getting lower. So we do want to see this red inside of the 10-year. It looks like as long as we can hold on today and we can stay below this line, it looks like it's going to happen, which means we've got some really good news for this week, which we should see interest rates get a little bit lower this week. Now, obviously, everything is subject to really weird life lately the last couple months. Historically, over the last 10 years, we always see rates get lower in January and February before they start to ramp up during the summer. Historically, that's always just what happened. Obviously, we're at a little bit different times than historic has always happened, but we should see interest rates improve in the month of January. We'll kind of keep you updated as that happens. If you have any questions, please reach out and let us know.